Hello everybody, I'm hoping you're having a great day in the great state of Idaho. Hey, I'm getting a lot of questions about 2-1 buy downs because we're seeing a lot of lenders and builders advertising 2-1 buy downs. So I thought I'd create a nice little PowerPoint presentation and kind of discuss what a 2-1 buy down is and how it can help you as a seller or a listing agent and help your buyers get into a house. So let's talk about some benefits of a 2-1 buy down first and foremost. So the buyer, the biggest benefit is they are able to ease into a lower interest rate and a lower payment for the first year, a little bit higher on the second year, and then fully amortized over the third year. For the seller can advertise, hey, I'll pay for your 2-1 buy down because it makes the house a little bit more marketable. As a listing agent, this prevents us from going into MLS and doing a price reduction, which we know price reductions are necessary, but it also brings the market down. And for the builders, obviously the same thing. They have to go into a price reduction, thus the market and the comparables go down. So what exactly is a 2-1 buy down? Basically, the seller gives the borrower a chunk of money. That money goes to the lender and it's put into an escrow account. And each and every month of that escrow account, the interest rate is subsidized. So a little bit of money, it goes towards the interest of the borrower's payment. Now, it can't go towards principal. It has to only go towards interest. And the amount of the money that the seller can give is kind of based off of the sales price, what loan program they do, and how much the borrower puts down. And then for the next 24 months, that money is subsidized out of that escrow account and helps the borrower with a lower payment each month. So here's a great example that I've given, and I've got a pretty good spreadsheet on this. And what it does is it shows a typical transaction here. So $450,000 purchase price. The seller or the buyer is putting 5% down on it, and the interest rate today is 5.89. It's a 30-year fixed mortgage. So typically, that payment would be $2,451.22. Now keep in mind, we're just talking about principal and interest. We're not talking about property taxes, we're not talking about hazard insurance, and we're not talking about homeowners association. Just principal and interest. So with 2-1 buy down for the first year, and when we say the first year, we actually mean a little bit more than the first year, because keep in mind, like this month is August. If we close the loan in August, the borrower's first payment isn't until October. So in this scenario, October of 22 to October of 23, their payment actually would be $1,940.97. Or the seller's escrow account that's held with the lender is subsidizing the interest each and every month by $510.12. Then, beginning in November of 23, using our same example, through November of 24, the payment goes up a little bit. So the payment goes to $2,188.75. Again, the seller concession is subsidizing $262.48, and that's for another 12 months. Then, beginning their 36th payment, then the payment becomes a regular principal and interest of $2,451.22. What this allows a borrower to do is kind of ease into that mortgage over the next 2 years. And by the third year, they're hopefully used to that little bit of mortgage on it. Now, when I said that there's limits on the seller concessions, once again, it depends upon how much the borrower puts down, and it depends upon what loan program. In this scenario, we're going conventional, so the seller is limited to 3% of the purchase price towards borrower's concessions. If this was FHA, it could be 6%, VA is 4%, rural development, USDA is 6%. Now, if the borrower put more money down, so let's say they put anywhere from 10% down to 24.9% down, the seller concessions can be up to 6% of the purchase price. And then if they put more than 25% down, the seller can actually put up to 9% seller concessions towards closing costs, interest rate buy down, other items. Well, what happens in our case, the total seller concession was $9,272.80, which is only 2%. So that 2%, or 2.06% actually, is the maximum we can do a buy down. Well, what happens if the seller is given the borrower 3%? Well, let's take a look at that. So what happens if you have more seller concessions? If you're under the maximum seller concession limit, then the seller's concession can pay for closing costs. The seller concession actually can pay for a buy down too. So you can buy the rate down, and then you can do a 2-1 buy down on top of that. Now, if you're over the allowable limit, it's kind of tough at that point in time to spend money. So if it's for a builder, we highly recommend builder upgrades. Get that sod in the backyard, get that sprinkler system in the backyard, get that stainless steel refrigerator. In the case that it's a private party seller, the best option is just to reduce the seller's the sales price of it. So this is kind of a very, very quick overview of a 2-1 buy down. If you have any questions, of course, give us a call. We're always here. We're professionals. We know what we're doing. Thanks a lot, and make it a great day.